Welcome to Top Gun Options Primary Portfolio Debrief. Matthew Buckley, call sign Whiz. Wow, what a week it has been. If your neck doesn't hurt, it should. So grab some Advil. Let's knock out a quick debrief of what the heck happened this week and how our model portfolio is looking, which is looking very well. Couldn't be more happier today, and hopefully you are as well. Well, obviously, unless you've been living in a cave, folks, last Friday, Good Friday, when the market was closed, the government came out with numbers, unemployment numbers, 120,000 created. And earlier last week, we had seen ADP come out with north of 200,000. So obviously, everybody's going to listen to the government numbers. You all have heard me beat the drum about what the real unemployment is. U6 up there around 14, 15%, which is just absolutely disgusting. So obviously, Monday, we opened gap down. So the market just came out of the gate on Monday, gapping down. Let's take a look at the SPY just to get an overall look at the week that was, because it really was a crazy week, because we went from we're in full correction mode to the world's not going to end, which it just would drive people crazy. So obviously Monday there's that open gap down. And obviously more bad news as the week went on there. But what also happened right around here, Alcoa came out with earnings that blew the doors off of analyst expectations. Well, obviously, as Alcoa goes, the market doesn't go. But it's a good harbinger or predictor of things to come. As we went further on in the week, we heard from Richard Fisher, president of the Dallas Fed, and also Janet Yellen, the Fed vice chairman. So Fed Chairman Bernanke's XO on Wednesday really say, you know what? We're going to do whatever it takes to keep this market afloat, which I couldn't disagree with more. No time to talk about that right now. So we saw the market recover and kind of find a little bit of a base. And then we had some good news coming with the international trade report. March producer prices came out, some China GDP, some revised GDP. And we really, after this massive selling, this is called what, folks? This kind of right here is called a relief rally. So we kind of had a relief rally. We had the worst trading day in about 6 months, and we had the best trading day all within the past 5 days. What's that do to us as options traders? It makes us smile all the way to the bank. And then what happened after hours last night? Well, it was great news for us, but kind of bad news for other people. Google came out with earnings. It's supposed to be $9.65 earnings per share and $8.15 billion in revenue. They beat on the earnings per share and were in line with the revenue numbers, but they also announced a 2-for-1 stock split, which really doesn't do anything for the stock. And a long story, we can get into that on the live trade brief on Tuesday. So today we're seeing a little bit of a pullback. So we usually see this. The market oversells, got some good news, and we see a relief rally. And then after the relief rally, now we're back settling into a range. So that's kind of what happened this week. So Google earnings. And then also today, JP Morgan, and Wells Fargo came out with earnings. So that's impacting the market as well. Not the best news out of the financials. So that's obviously putting me a little on notice for a Goldman Sachs trade. But again, folks, Goldman Sachs is not Wells Fargo. Wells Fargo, JP Morgan, they reported decent numbers with what operations? Their trading operations. As you all know, the market in the first quarter did extremely well. So their trading arms did extremely well. But Wells Fargo still has the albatross of mortgages around their neck. So obviously they're going to be feeling a little more pain. So Wells Fargo not out of the woods yet. So that obviously also impacts our Bank of America diagonal, which is fine. We still got earnings coming up next week on Bank of America. Don't expect them to come out and say they, cured cancer or Jesus is taken over as their CEO. So I don't think that $10 strike is in any jeopardy. As a matter of fact, we might close that out right now and roll it out to the May $10 call just so we can capture a little bit more premium. The good news, this Google trade, man, we hit it right down the center of the fairway, right in between the uprights, capturing essentially the max profit right now, or pretty close to it. We're capturing, we had about $2,000 or $2,025 earlier. We're probably going to close this out just so we can, use our capital and deploy it somewhere else. But I'm also going to put another Google trade on with some of those same uprights in Iron Condor, because a stock split usually doesn't work out too well. The Nike trade, I still like this one. It's kind of holding up with the market pullback here, but still, I don't see it. We talked about it, and that 110 line. I think we're fine with our Nike trade. And matter of fact, we're so fine that I added a 110, 115 bear call spread in May. So hopefully you got that one. USO vertical still doing what it's doing. You saw it the other day as oil spiked up and gold spiked up. It's doing what it's doing. Again, this is a June trade, summer travel month, so we're banking on some issues there. Our VXX, love this trade, man. It flew all the way up. It didn't fly all the way up, but it got above 20 in the past week. So let me get rid of my drawings real quick and clear this out here. But look at that. Volatility just spiked through the roof as the market retreated. We had a spike in vol, and it came up to our 20 strike. I was never in doubt, and volatility came back in. Even it's coming in today. It's not up that much. Not that big of a move on this much of a pullback today. So loving our VXX diagonal. I know a lot of you are impatient traders, and Whiz, I like the in and out stuff and moving around. Well, folks, come on. We just bought a Porsche. We bought a deep in the money 80 Delta call out there, knowing that volatility is going to spike eventually based on something bad going on in the world or in the market, and we're going to sell the heck out of the front months to finance that deep in the money call purchase there. Amazon Iron Condor, that's still going right down the fairway. Again, this is an earnings trade. And the GLD Iron Condor, folks, this one's going down right down the fairway as well. Hasn't been the flight to safety that we expected it to be when the market really tanked this week. I expected gold to kind of be a little bit of a flight, and it wasn't. So this lets me know that that gold really has found a bottom or some support, and it's also found a top. So let me delete those real quick. So again, we had that 155, 150 on down here and the 165, 170. And again, not so channeling right between the goalposts where we want it to be channeling. So happy with the GLD trade. So that's a quick update about what happened this week. And also today, folks, just to let you know why we're in a little bit of a red after two decent rallies, is consumer sentiment came out. 75.7 versus 76.2 in March. What's that mean to you? Don't worry about it. It's just easing back. Those numbers are still good. Even though consumer sentiment pulled back a little bit, the market's using this as an excuse to sell off a little bit. So keep your powder dry. Very happy with what's going on in the model portfolio. The only thing that's sticking out like a sore thumb is Goldman Sachs. But again, Wells Fargo, JP Morgan reported strong trading returns for the first quarter, and they have other issues with subprime and other stuff that Goldman Sachs does not have. Goldman Sachs, I hope, traded the hell out of the first quarter, and you saw this week, or yesterday actually, it was above 120. And of course today it's taking it in the chin with the Wells Fargo and JP Morgan gains. So keep our powder dry. Model portfolio is looking good. I hope you have a great weekend, and I'll see you all Tuesday at 0900 in our primary live trade brief. Happy hunting. Make sure you hedge. Have a great weekend.